Good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Tuesday, February the 15th. I hope everybody had a very good Valentine's dinner last night. I'm not going to ask you today. I'm not going to embarrass you, Ollie. Don't worry. And let's move straight on to mining. What are you going to kick off with today, Ollie? Glencore maybe is the big one.
Yes, good as place to start as any. Some huge numbers there. Revenue 204 billion, up 43% year on year. EBITDA 21 billion, up 84% year on year. And then net income of about 5 billion. 26 cents per share dividend, split equally into two 13-cent tranches over the halves. And most of that has been driven by higher commodity prices, particularly coal. If you look at the breakdown, the marketing side, so trading is actually fairly flat. Not quite as easy conditions with supply chain issues, logistics, smelter shutdowns, all of those sorts of things hampering that side of the business. But the actual mining and production side is where the earnings growth came from. Industrial activities, that EBITDA there increased from 7.8 billion to 17.1 billion, mostly from energy products, which does include coal.
Yeah, look, I tell you what, they were incredibly good figures, Ollie, and the markets marked them up 17p this morning. That's 4%. I mean, the stock price at 4.30, 4.35p has sort of come up a long way actually recently, because it got down as low as sort of £1 during the pandemic, but it's still below the IPO price, yeah. 500p. So it's got a little bit further to go. But I mean, these are staggering numbers. You may be about to talk about BHP later or not, I don't know, but they obviously have record numbers overnight as well. You know, we are back in a mining super cycle, and particularly for sort of battery metals and critical metals. And this is going to last, I think, for, many years. And with this sort of cash flow that the majors are generating, it is inevitable, isn't it? They go and start buying up, the juniors, etc., all the quality ones, refilling the hopper, so to speak.
Yeah, I think so, and there's a lot of reference in Glencore's announcement to new commodities and the energy transition. So perhaps not just in the commodities that you're used to seeing, and the bulks.
Yeah, so that sort of follows, doesn't it? What Sir Mick Davies is doing at Vision Blue. Brian Manel's doing it at TechMet. Friedland's certainly doing it. Well, he's such a huge empire, it's harder to track. But it's the way that things are going, isn't it? These critical battery metals.
Yeah, and the other interesting point I think that comes up in there is that they're actually doing a lot of work in relation to carbon prices and offsets, and they're now applying sensitivity analysis to their portfolio against carbon pricing. I mean, there's not a huge amount of detail, but they do say that it's resilient to it. Obviously, carbon prices have risen dramatically over the past sort of 18 months to, I think, about sort of 90 euros a ton from sort of 10, 20. And so anyone buying offsets so that they have to minimize the operational change to their business, that's going to be having an impact on margins.
Yeah, okay. What else did you want to cover this morning then, Ollie, as well as the majors?
Cornish Metals, they've expanded their mineral lease by South Crofty by about 222 hectares. So it's not a huge swathe of land, but I think it sort of highlights part of our view that consolidation is key to the Cornish mining sector, but also that it's actually quite a complicated thing to do. You can see that they've acquired this lease from the Vivian family, and a lot of these mining leases are small packages, and the rights to them go back centuries. So putting them together into a commercial package is no mean feat.
And it's the way forward down in Cornwall, isn't it? Funny, I just had an email from one of my clients. He says he used to go fishing with the Ferreras Vivian. Very complicated now, I can't pronounce it. But I think we're going to see more of this, aren't we? Of people putting packages together of people's families, mineral rights down in Cornwall. We heard it from Cornish Lithium. We know that Mark Thompson is going around putting packages together. And this is one of the interesting things, I think, Dan, about the whole Cornish mining situation, isn't it?
Yeah, exactly. Yeah. And I think the more consolidation, the more cooperation, the better for the region as a whole.
Yeah, no question that cooperation is what is required for the region. It won't work without it. The problem is there's a lot of little players down there that I suspect, although they say they all get on with each other, one of the things we're trying to do is find out whether they actually do or not, isn't it, Ollie? They don't always get on as well as they claim. But anyway, more on that later, maybe. What else have you got this morning?
Sol Gold half years. We're talking about commodity super cycle, and people will be looking for large development plays and exposure to new projects. But London is a bit lacking for these generally, and I think it's a real shame that this is probably London's biggest one. They spent $50 million in the first half of this year, so that leaves them about 58. But that cash spend is just incomparable to some of their peers with much higher valuations. $9 million on SG&A, $6.5 million on interest. If you compared that to, say, Philo Mining or Solaris, which are much bigger companies but also developing huge copper projects, they've spent a magnitude less over the first 9 months, not 6, sort of 20 million Canadian or 27 million US respectively, and their SG&A is half or a third lower. So I think, again, highlighting London's weakness in mining stories against Canada.
Yeah, look, we're very aware of that. Obviously, we're fairly exchange agnostic and do a lot of work with the Canadian mining companies. Very keen, obviously, to get them all to dual list over here on the Aquis Exchange. But yeah, we look at a lot of the Canadian mining companies, and they do, general, tend to be better. One I noticed this morning, I don't know if you saw this, Ollie, but Kazira Global had quite a positive update on what they're doing down in South Africa. But the reason that interests me, their stock's up 20% this morning, is that obviously Tectonic Gold that we act for has a sort of 10% stake and a bit of a joint venture with Kazira, which is probably very, very good news for Tectonic Gold. And obviously with the gold price also now starting to motor a little bit, isn't it? We're up at 1860. I would have thought that's all pointing pretty good for small gold stocks.
Yeah, and actually a couple of comments I saw on Twitter recently about how UK investors are getting used to COVID rules being relaxed, but actually forget that a lot of other countries have still got them in place, so their work on the ground is still quite hard to do. But South Africa is obviously also pretty much removed all of its COVID restrictions, and so although the macro environment is pretty difficult, you're starting to get stuff done on the ground.
Yeah, I believe the CEO, Brett Boynton of Tectonic Gold, is in South Africa at the moment, actually getting things done on the ground, as you say, Ollie. So, yeah. Anything else you want to quickly mention? We've nattered away for a little while now.
I think that's probably enough for today. We can pick up anything else tomorrow.
Yep, very good. Thanks, Ollie.
Cheers.